Happening, Don? Good morning. Willard, good morning. Gil, good morning. What's happening, Chuck? Rob's here. Omar's here. All right. How'd everyone do yesterday? All right. Uh, I I did put on a hedge last night. I was going to throw this out for my crash insurance masterclass. It's out there. It doesn't cost a lot of money. It's just over 10 to 1. It's a low probability trade until it's needed. So I'm going to make that official this morning. It's probably a little bit cheaper than when I took it last night. I think I waited until like 9 p.m. or 10 p.m. my time. So it was weird. I tried to get on like 6 p.m. Eastern time, and it was like in between sessions. So I think it was, I don't know, daily savings was 1 hour difference. So anyway, I got the trade in, but I did a 5,800 buy put. I just did a bear put spread that was down here. It cost about 450 bucks, and it pays $4,600. Now, all price has to do is be below 5,800, which obviously is not a good sign. So it's a bit of a hedge in addition to having some long volatility. So I'll throw it in there. I'll make it official. It's probably cheap. Like I said, it's probably cheaper than when I took the trade last night because we've got futures. Well, I guess futures is flat. Okay, let's get a quick peek at some earnings that came in overnight. Let's see here. Wednesday after hours, Robinhood down slightly. They beat on top and bottom. Didn't move a lot overnight. Up slightly on IONQ. App loving. Up a decent amount. I mean, it's expensive, but that's up around 6%. Not too bad. AMC, pretty much untradeable, up 2 cents. I wouldn't touch that thing. That was fun in 2021, and then it stopped being relevant. Dutch Bros up slightly, up about $1.50. That helps our ratio spreads we have for Project Options Edge. Qualcomm, not sure what that spike was all about. Down a little bit pre-market. ARM Holdings up slightly. Snap up a decent amount. That's a good win for Snap. Okay, up 17.8%. Let's go Snapchat. Let's get some range trading. Let's get some squeeze. Like see Snapchat get back up into the teens. I'm holding some shares around break even 9, less 76. So my break even's like $7 or something like that. So I've got 9 minus 76 minus 92. I mean, I own the shares at 732, so it puts me into profit, but obviously I'd like to make a little bit more money. So maybe chart alarm set here back at $13. I'd be pretty happy letting this thing go at 14 to $15 without wanting to hang on to it too much longer. So see if they get to squeeze to the upside. Steven, first time here. Okay. What's up, man? Nice to have you. Willis says, good day with the standard daily profit play, 30% profit target. Nice. Yeah, so if you, well, it was interesting timing. I felt like I got a really good exit at 55 cents. I was kind of watching it all morning, 75, 70, 65, the market. Let's just pull up the indicators yesterday. So we closed, let's see here. Daily profit play, going to the ATR tracker. So we did win the day, which was lovely. Close was 67.96. And we ended up closing back within the 50% ATRs, which mainly was just the aggressive sell-off at the end of the day. So pretty decent move. I mean, the market was up like 0.9% from the open. So from the lows of the day, we opened up down a couple of points, spent all morning up 0.9%. So pretty active price for the day. Rally 0.9% to the upside and steady fall into the close to finish between the 50% ATR levels and inside the MMM range. So the net on the day, open, close, was about 26, 27 points. We had a plus or minus 47 going into the day. So we did expect some volatility. We certainly got it. But market makers did the thing. If you were in my daily profit play, we would have had, so I exited right in this little choppy zone. We had that, that kind of 10 to 15 minute pop to the upside. And then it stalled for a solid hour plus. So by the time it was, 10:30, 10:45, 10:50, I was able to get close to a 50% exit on my daily profit play. And then it proceeded to go higher. Now our level was 25 yesterday. So 68.25 was tested. 29, in fact, was the high. And then it proceeded at the end of the day to fall. So we had profit opportunities here when I exited. If you held onto it, you would have been seeing a small risk, not like a huge risk, but small risk through the day. And then in the close, 25 is like the threat level, but it did proceed lower. So close within the range that you needed and should have been plenty for a winner. So whether you got out in the morning or held it through the day, it was still a winning trade. All right, 6796. Let's give that a reference. 6796 for the daily profit play indicator. Recentering. Give me a few more workspaces. Get some gamma levels. VIX at 1810. Okay. All right. So 6815 is our positive negative gamma pivot. Call side 6850 for maybe a gap fill. That would be from Monday to Tuesday. Maybe a gap fill. Going back to these recent highs, I think that perhaps we're still in a bit of a pullback unless price can break above. I would say price has to get above 68.50. We get above 68.50, then we're talking resuming, maybe able to retest the highs again, maybe pushing higher. But right now, making lower highs, lower lows. We are in negative gamma for opening and staying below 68.15. So that would feed into, a little bit more volatility, but potentially lower lows. Futures slightly down this morning, but mostly flat. NASDAQ futures down 0.09. Dow futures 0.09. Russell futures down 0.11. VIX is 18, a little bit less than before, but still elevated. And we also could be staring at a VIX that goes back and forth between about 17 and 20. Okay. So keep an eye on that for the day. VIX box will calculate our highs, 1808 VIX. That should be putting us around a 1.13% move. That's on the extreme side, but that's a pretty safe way to call tops and bottoms. Just be careful on the bottom. I would say this, be careful on the bottom if the VIX is going up for the morning. The high is pretty easy to call. If the VIX is retreating, meaning like the VIX goes from 18 down to 17, we shouldn't stretch all the way up to the VIX high. But it's still a good reference point to have. I don't mind getting filled at it, even if you're taking a partial credit. Like if I did a 5 wide, I got filled for 50 cents or $1. That's still a pretty good fill if you're going based on the VIX box. Okay. All right. So we'll get some highs and lows. Put this over here. Day to day, we'll keep an eye on this. 1.13 is my calculation. So we're looking at a VIX move 1.13. So around 68.75 would be my potential top. And again, if the VIX stays consistent, we shouldn't go too much lower than 1.13, which is around 67.20. Okay, plus minus on the day. Let's go to SPX. Showing a 36 to 37 market maker move. We shouldn't have too much in the gap because futures is pretty flat. So we're going to open right around our close from yesterday. And let's position accordingly. So largest gamma level is 68.50. Let's pull some dynamic trend. Let's pull some real-time gamma. Market opens in about 15 minutes. Okay, so pre-market, two big levels, 68.35 and 67.70. Levels that I think could be tested today, plus or minus 37. We could see price obviously go beyond that, but it's the question is will market makers keep prices today from the open within 37 points? Okay, that's the plan. So I will likely look out. Excuse me. It was a long night with a baby last night. If the market can open, close within a plus minus, it says 37. We'll just say within 40 points, right? They do their job. They keep things within 37 to 40 points. My goal is, as far as my daily profit play, is if I can get some decent premium at like a 45 or 50 point wide. So up here, down here, let's see where the pricing is available. I'll look and see like what a 10 delta looks like, 12 delta looks like this morning. Is US 500 the same as SPX? Maybe it should be close. It's a CFD, right? So I mean, different ways to trade it versus like a stock options portfolio or broker. US 500, I mean, this is a lot for international traders, right? So we're trading at 6793, and that's live price. So US 500, SPX 500. It's a CFD feed, so this thing runs like 23 hours a day. So this essentially is like your full price reading. Your SPX is going to have opening bell, closing bell, so you'll have gaps versus this will fill in those gaps, right? So if you've traded currencies before and you ever trade like inefficiencies, supply and demand, that's a pretty good way to read the chart is using SPX 500 or US 500 because like when this market fell on October 10th, okay, it wasn't a surprise that this was a crazy inefficiency and the market came back to test the entire amount. So price action wise, that's inefficient. The next week, the market spent the entire time pulling back to start right back where it left off the inefficiency. So just as far as price action reading, that's a pretty good one to look at. And I know sometimes it gets confusing with gap fills. You can see here, we still had a gap. That was because it was over the weekend. But that gap, guess what? Got filled. So, but similar, right? SPX 500, US 500, you're just filling in the gaps because this is a 23-hour feed. Okay. Rob says, how'd you get the 40-point number? I pulled that from the plus or minus in the broker platform. So you get an IVX of 20.5% plus or minus 36.77. This is what the market makers are expecting price to do today as far as the up and down. Now their job is to keep it within that. So if we open, we shouldn't have prices from open to close going beyond 36.77. If you have a thinkorswim platform, this might be a little bit higher. That's what I'm saying, probably about 37 points to 40 points as far as open to close. So if market makers do their job, that would be the play. Okay. Futures 0.06, potential top and bottom. Keep an eye on the volatility index. We're 1815, which is up a little bit. 18.15. So about 1.13 and change. We've calculated out like the 1.13, 1.14 highs and lows. So if the VIX is going to run up to like 18.5 today or 19, then this bottom is not necessarily safe. But gamma lows around 67.50. That would be about 48 points lower and 0.71% down. Obviously anything can happen. If we break these lows, which wouldn't surprise me, I said this did everyone take a look at my video from yesterday? I posted this video in Telegram. I ran my pinch point masterclass until like the close of the day. And so I posted a video here. So I'll just review this. So you can check this video out. It's like 23 minutes. October 10th candle is very important for all U.S. markets, S&P, NASDAQ, Dow, and Russell. Just the structure, the price action on that October 10th candle to me is a big low that right now, if the bulls are going to maintain control, we do not want to see price take out those October 10th lows. Okay. So the rally from that October 10th candle was met with aggressive support. We pulled back and hit the inefficiency and kind of, it didn't go lower. That was so surprising that the October 10th low was one major sell-off. And then literally the weekend, the next week, it tested on Tuesday and we all of a sudden went back to all-time highs. But that was led with little market breadth. So the Mag 7 and AI were the only things that were driving those gains, and the SPY was up, the Qs were up, but the equal weighted were down. So that was my concern, is that we're having all-time highs with no market breadth. Anyway, earnings for the most part coming in, I'll have to read this to you, but for the most part coming in pretty solid. We had Mag 7 earnings pretty solid. We've now crossed the longest U.S. government shutdown in history. I know there's concerns over .com-like valuations. Doesn't mean that it's a bubble top. It doesn't mean it's a bubble bursting. It just means that we've got to be cautious. We have to acknowledge that there is risk to the downside. So, I will trade a lot more in the indexes space than I will individual stocks for that exact reason. I don't want to bring on all this crazy volatility to my portfolio. Individual stocks, yes, we can have big winners, but we can also have huge losers. And it's tough. If I need to find this historical post, but there's a guy that I follow on Twitter or X, Charlie Bilella, pulls some pretty good data. And basically it's like a 30 to 40 year history of being a stock picker. If you're a stock picker, you don't make any money in the long run, because the cream of the crop, cream rises to the top type thing. And because we have market weighted in the S&P right now and market cap weighted in the NASDAQ, the best companies, once they get to the top, they don't always stay there. So that's this big concern with these valuations, is we're being led by Mag 7. It's the only thing that's really performing. It's responsible for, 40% of the market. It's all concentrated in Mag 7. Every ETF, there are hundreds and hundreds of ETFs. They all have exposure to Mag 7. Every 401k has exposure to Mag 7. So you have this like forced play in like just allocations for 401ks going into Mag 7. So it fuels it. But anyway, eventually if there's a rotation, or if one of those, Mag 7 stocks is replaced, then things look different in 5 or 10 years. So, as nice as it might be to say, like, I'm going to hold this stock forever. Maybe, but there's always trades. Okay. All right. Let's see here. So yesterday I had a ridiculously busy day. I don't think I've had that many trades. I push a lot, like 50 trades a day or 100 trades a day, but yesterday was, I think, one of my highs for the year, 178 trades yesterday. But it was a lot in waterfall. I closed a lot of waterfall trades out, managed to profit, put as a break evens. We end up closing out 6 trades yesterday out of the like 10 that we have open, or maybe 9 that we have open. So that was good. It felt nice to take some profit, de-risk, and also bring some capital back in. So I ended up, I said this yesterday, I'm probably going to raise about 200K in cash, and I did. So I just de-risked quite a bit, which I'm totally fine with. And that brings my beta weighted delta down a little bit. So 5 minutes for the open. Let's figure it out. If you didn't have a chance to check out the video, check it out. 23 minutes. Just a big technical outlook on where I think things need to stay. I think the bull market is, well supported. It might still respect this broadening pattern, so we might poke this low. Let me change the color here. We might poke if we come down in like an orderly fashion. We might test this level, but we probably want to go back and see some highs. And again, I'm watching that broadening pattern. My concern is that right now, after this rally, okay, I think that we could still surprise the upside, and that is still the pain trade. I'll check AAII sentiment. Today we should have the NAAIM, which is the investor management survey. I want to see where things are allocated. But if this is a broadening pattern, if it blows the top off, great. There's your bubble move, but it's going to run maybe 5, 10, 15, 20% higher. Like, do not overestimate how silly this market can get. You think it's silly now, who knows, right? This market could be up another 20 to 50% before it gets really silly. So, I'm not calling the top. I am exercising caution in case this thing rolls over, because if this is sideways and the market's struggling to make new highs, if this is a rounded top and it breaks this support, that support gives a lot of structure back. So I think the caution is, depending on how this rounded area plays out, or depending on how long this consolidation takes, bulls really want to see more to the upside. Bears are just going to be clawing their way through it, and if they can break support, that's their in, that's their open to really drive prices lower. So anyway, we'll figure it out. This is why we're here every day. Okay. All right. VIX is already up. Look at that. So we went from 18 to now 18.29. That is going to shift my calculations a little bit. 18.29. So now I look like a 1.14. It's still about the same on the VIX box top, but the bottom, I would be careful on calling a bottom today if we're going to see an elevated VIX. So try not to call the bottom today. I won't, but I'm going to look to see if we get a good trade inside daily profit play and then position accordingly. But the pivot for positive negative gamma is around 68.15. Okay, I've got a 68.05 and a 68.15. Yeah, we'll see. 67.70 futures now. Okay, we just had a futures fall from like 0.03 now to 0.19. So we are leaning into the open a little bit softer. Things are rolling. We're probably gonna have a small gap to the downside. So we have 2 minutes for the open. SPY is gonna be down pre-market slightly. Yep, it is down $2 and change. So we're gonna have a small gap here by about 0.18%, kind of matching what the futures market is. And like I said in that video yesterday, watch this. If the bulls can't break this trend line, bears are in control for this little correction. Nobody wants to see this. Nobody wants to see this like massive dump to the downside. But if it is just, orderly corrections, that's okay. Eventually, when the bulls can break this trend line, things can resume. But this is the time to exercise a little bit of caution, de-risk, because it's never fun to be like, oh, it's just a little correction. And then all of a sudden, whop, have like a really, really nasty day. And if we take out that October 10th low, I'm a little bit more cautious on how the bulls can maintain these all-time highs, because they might give some back. All right. So watch that today, but we're opening up a little bit softer this morning. Futures just came down by about 15 basis points. All right. It is opening bell. We're looking at a gap lower. Let's go real time. So 67.70 seems doable. 67.50 seems doable. Again, it's noisy at the open. It always is. Let's see what happens. We might be able to go down pretty far on the put side. Pretty far on the put side. VIX at 18.3. Let's have a quick peek. So SPX for the day. Okay, 50% ATR is 68.30. Not bad, not bad. All right, I'm gonna go. I'll just stick with what's been working. I mean, I've gone a little bit lower on the delta. I'm gonna go maybe 30. That's the 50% ATR. But my high is around 68, 70. I mean, that's way out there. But delta wise, let me see how far away it's from 90 to 30. That's only 40 points. Market makers now looking at 30. So that's a little bit. I'm going to go small. I'm going to go 35 to 40. And put side, I'll do something similar. This might not fill if I'm going out, that low in delta. 75 cents. All right, I'm going to take this trade for $1. Pending order. So it's not filled yet, but I'm going to make it a pending order. I'll put that in for daily profit play members. New trade. $67.15, $67.10. Okay, see if that gets filled. Watching some real-time gamma. I mean, it seems gettable around like 68.25 to 30. It seems gettable around like 67.70 to 67.60. So what I'm trying to do is position for, a safe resistance zone, safe support zone, and hopefully not see price do too much. I'm going to keep in mind like that plus or minus 37.38. It's been reduced at the open to around 30 points. As long as they do their job and keep things within 30 points to the open close, then mission accomplished for the market makers. I'm not going to go super, super tight on the call side or put side. I'm going to go pretty, pretty low. Michael Burry shorted 1.1 billion in AI stocks on Monday, causing the crash. I don't think that's causing the crash. I think that's a headline. Michael Burry's one man, and it's maybe a few $100 million, maybe a couple billion. And honestly, I'm sure the guy's long somewhere else too. You never get the full story when it shows those headlines. So, anyway, it's just a headline. I think you put what the market's been. I mean, the market's been drunk on uncertainty for the last 6 months, but more uncertainty has come in. Like we keep kicking the can down the road with China. Now we have Supreme Court revisiting tariffs. Then we have no data. We have no labor markets. This week's ADP was okay to stabilize things. We have the Fed. They're going to cut. They're not going to cut in December. It's just exhausted. Like it's so much noise and so much uncertainty. It's like I see the market is taking a freaking break. So I wouldn't pin Michael Burry as the reason the market corrected. I mean, earnings have been pretty solid. I think that Palantir was a big drop. He revealed a position in Palantir. Kathy Wood revealed a position in Palantir, but there's also people that make money on the reverse ETFs of Kathy Wood and the reverse ETFs of Jim Cramer. So it's just a note. I did, Alan. It's in Telegram for daily profit members. Oh, I know who he is. I've watched the movie many times. I mean, I respect Michael Burry because he's not an emotional trader. I think he's, a trader that's data driven. He's on the spectrum, and that was what was so appealing about his, him and to that. But I will say this: I don't want to say the guy got lucky, and that's terrible. It's like obviously he's brilliant, but I will say that if the Great Financial Crisis took another year, Michael Burry at Scion Capital would have been broke. I mean, the movie kind of, in Hollywood fashion kind of glamorizes everything, but you know how he was in at all those bank meetings? If you saw the movie The Big Short, he's in at the bank meetings and they're laughing at him and they're taking his money. They're making him pay these ridiculous premiums. He started that trade in 2006. 2006, 2007. Things didn't roll over until like 2008. If we had gone another 6 to 12 months, he would have been broke. And I did listen to a podcast. I want to say it was Market Huddle. I like those guys. It's Patrick Shrezan and Kevin Muir. I think they're two Canadian guys, but they do a really good job bringing out a bunch of great macro guests. And anyway, they had somebody that was, working in the office where it would have been, I think it was Michael Eisner. It was Steve Carell's character. I mean, he's a real guy, but Michael Eisner, that little arm that had their hedge fund. So he was in that office, and this guy was on the podcast. But he was talking about how there were other traders in that same arena that were taking the big short type trades, but they didn't last long enough. They didn't survive. So they had the right idea. They saw the writing on the wall, but they started the trade in like 2005, 2006, and they couldn't hang in there long enough. So, a narrative like that where you're just all in on one thing, I can't see myself ever doing that. I think that's crazy. I think that there's so many ways to trade tactically that I don't know. And granted, might never be an all in will mean I'll never make a 400% for the year, but I'm happy also making 40% for the year. That still pays pretty well. Yep. So all right, so we'll see what happens. Price action for the day. I'm just watching. I mean, I'm seeing the same thing you are. I'm looking at my gamma levels. Looks like the bear sides might line up a little bit more. Watch for a couple of key levels here: 67.70 and 67.60. If the bears can find that, that could be some decent intraday support. We also come back and find the low of the week. Right, this was our gap open for this week, so we gapped way lower, held on Monday, held later in the day, held on Tuesday, ripped up on Wednesday, and we're hanging out. So, possibly lows getting tested, hopefully not necessarily broken below like 67, 60, or 50. But price today is pretty chill. I'm not going super tight to price. I'm not doing a 15-20 delta. I'm doing a 10 delta. It's been working very well. We've been taking really good profits on daily profit play. It may not fill, and that's okay, but I'm going to put it out there safe where I want it. Okay. Let me see. 30 to 35. Let me see what that plus minus is. We're trading at 90 right now. We could go 20, 30 points to the upside. All right. Chuck, let me see that question there. When you put a trade in and you get a pop up saying read a pre-flight warning. What? When you put a trade in, you get a pop-up saying read a pre-flight warning. Is that in your broker platform? Huh. Well, who's your broker? Tasty. What? Um, I'm not sure what the warning is you're referring to. I don't know. So give me an example. Like, what are you trying to throw in for your broker platform? If you're trading SPX, I'll just throw a trade in here. I'm not going to take the trade, but I'm going to look at it like if I put in this trade on the bear call side, this trade on the bull put side, $1.70. If I click review and send, I don't have any issue with the trade. So are you getting like a warning in here? Usually there's, hey, there's no bid ask price, or you can't take it up. It's going to have to wait till the next session, or you don't have enough capital or insufficient funds. Could be related to new changes of lake. Yeah, I mean, unless you're trading airline stocks, no, I really don't know what the warning is. If you want to send me a screenshot, take a picture of it or take a screenshot of it, and you can email me, chrispulverpub@gmail.com. You can send me an email. I'll happily take a look at it for you, but I'm not sure what it is. Okay. Sounds good. Yeah, I'll take a look at it. Chris Pulver Pub at Gmail. I'll type it in the chat. Chris Pulver Pub at gmail.com. There we go. Okay. Price seems to be pretty chill today. Let's see here. Maybe I can get a good looking trade for double ups. We've had some pretty good success this week with it. Yesterday was another like really nice winner. Maybe 67.50 seems doable today. 67.50. Is it cheap enough? If I went 15, 15, that's not a bad trade. Small risk. Let's try maybe 1380. Try here. Let me see if I can get that thing pinned. So let's go 50 or lower. I'm gonna go 50. So 50, 70, 30. See if I can get 18 bucks on this trade. Crap. Might have to go a little bit lower. Let's try a 40. Try to get in here for 20 wide. That's better. 1810. All right, just got filled for 1810. Double up. I've got a trade coming into you right now. So double up today's expiration. And that is the 68 40 or 45. 40, 68 40. $18.10. Okay, and it might actually be cheaper now. Nope, 18.10, 18.20, 18.15. Like you get a little bit more credit than I did. So that trade for double up, what I'm looking for is I want to see if price will fall into these lows, possibly coming down to find some of these gamma levels to the downside. If that offers up maybe 50 bucks, 100 bucks, then I will probably take the quick profit. I'm not seeing much on the upside now, so I don't really want to place the double up trade to the upside and downside. I'm just going to see, will this just leak a little bit lower? Can we grab some quick profit there? So let me keep a close eye on that one. Okay, so if this makes, I'm going to go after a quick 50 bucks or so. So 17.10, I'll go 17.60. See if this will close out for like $50 profit. It's a small winner. Maybe I go after 100 bucks. But I'll keep an eye on that one. I put them in for the members, Charles. So members have members Telegram channels, members have spreadsheets. I put them in there for the members. Bill, double up when there are two trades, one fills, the other doesn't. Should I adjust and settle for lesser credit? I mean, possibly, right? Like if so, what trade did you take one yesterday? Did you get filled yesterday? Hopefully it was the put side. I mean, that put side ended up paying. I did the numbers at the end of the day. The put side yesterday was fantastic. I mean, I was tracking it here. We had an 18 or 13.15 credit to start the day. When I posted the trade officially, it was 13.15 credit. So we're risking $1.85, and it was already showing profit at 7.65. And then I updated late in the day, 13.15 trading all the way down to 405. That's over 900 bucks, and then over $1,000, over $1,000, and then it closed and cash settled for about a $450 winner. So you had a huge opportunity. I still took like 100 $50 out of the trade, and close it out. But it's to me, it's always kind of fun and entertaining to watch these things through the close, especially when you get like the big fat like perfect pin price, which yesterday it kind of ran right back down to that 68.05 level. So anyway, to your question, if one gets filled and one doesn't, obviously just manage the winner. It's small risk, manage the winner. I think that's the best way to do it. So let's see. Let's see if these gamma levels will hold true for the day. We are in. So this yellow line above it's positive, below it's negative. If we are going to stay a little bit softer, maybe just a slow decline to maybe test the lows again for the week, maybe. I kind of need that to happen for that double up to pay. Oh yeah, you have the wrong side. Okay, and that's okay. I mean, again, the wrong side is still a very small risk. So I was on the wrong side too. I lost the full trade, but I made enough on the winning side to walk away profitable. But yeah, if you had just the losing side, it is a small risk. That losing side would have been a what, $1.45 loser. $1.45 loser that had enough to make $1,300 if you're right. So you can come back and recoup that no problem. Yeah, fixed $65, perfect. Super small. Okay, good stuff. All right, I'm going to set a couple chart alarms. So I'll have to sit there and watch that price action all day. Let's see if we can get down to the 50% ATR 66. Should be enough to see some profit down there. Let's go 67, 67. Set a chart alarm. If we come back to this 50% ATR 68.25. Okay. Daily profit play still has not been filled. That's fine. I'll just let things kind of hang out. But hopefully, I'm not getting a bad read on the day. We are in negative gamma, so I'm hoping that negative gamma will at least put pressure on this market to keep it lower. Whether or not we make fresh lows in the day, I don't really care. I just want to see, can we at least get down to test the lows? If we do that, then my double up trade should offer some profit. If we come down to test the lows, we should also get filled, hopefully, on our daily profit play. And that dollar credit should help us out. That's a pretty good fill if we get it. So that'd be down to, 67.15 would be my line in the sand. And we're talking about lows around 65, maybe gamma lows around 50. So we'd be way out of the way. And I'd be pretty comfortable we can hang on to that trade for, 30% profit, maybe on the slightly greedier side to like a 50% profit on daily profit play. Very different, Aggie. Totally different strategies, different construction. Daily profit play is designed to kind of get in early and get paid early. Double up is, I always use a phrase, skate where the puck is going. So I'm taking like these really low risk trades for a high reward. And daily profit play is a little bit backwards, where we go slightly more risk for our consistent profit, but we get paid, 90 plus, like 90% of the time. Double ups, I'm winning about 58, 59% of my trades, but my winners are huge. Like yesterday, the winner offered up like a 600 or 700% winner. I closed out for like 150%, still had net profit like 60, 70% on the day. But it paid up to like, actually it would have been, it had over $1,100 on a debit of $1.85. So $1,100 profit over $1.85. You had almost a 600% winner. So you can't get that with daily profit play. Daily profit play, you can hold the trade all day and get a 100% on credit, but you're still taking a maybe 20 to 25% return on risk. But double up is way more profit opportunity. Okay, good question. All right, keeping an eye on this. If I can turn this like 50 to $100, see what happens. I'd like to see price fall into fresh lows on the day. If we get there, maybe 70 to 65, that might offer me a quick like 30, 40, $50. I might take the profit. Link to the double up service. Sure can. Deanna, do you have that link available? I know the checkout page is, I want to say it's prosperitybub.com/double up. Double check that. Looks like it's working. Yep. So let's see if we can send the exact hyperlink. It's prosperitybub.com/double up is the link. And always, I mean, if you have any questions on any of these services, you can just reach out to us. Support at prosperitybub.com. Give our team a call, 904-706-3537. Ask them whatever you need. Okay, nice mark in at 1820. Great. Good fill. Keep an eye on this one. It's up a couple bucks now. Let's see if this gets better. Keep a close eye on that one this morning. If we revisit the lows, this is what I'm watching on my other screen. So if we revisit the lows, come into my gamma levels, maybe find this 50% ATR, I'm probably going to take the quick profit because it's going to offer profit, and I want to see if I can manage it for a quick win. Okay, so we'll keep a close eye on this one. I set the take profit at $100, but like I said, I might be comfortable just taking 50 if it offers it real quick. Yes, I can. So for the crash insurance trade that I took yesterday, how many of you can trade futures? How many of you can trade futures? Because I took it in futures. I did it in ES. Okay. There's a couple ways we can look at it. I can probably price it out very similarly in SPX. It may not have the same type of payout. It might cost a little bit more to do the trade, but I'll make something comparable. On double up, can I do it with small account under? Of course. I mean, double ups are all about small risk. I mean, the trade that I took on double up, I'm risking $190. And I'm not going to say that's high risk because it's certainly not. I mean, it's $190 risk to make $1,800. But I take a lot of these trades where I can get it for like less than $1.50 risk, less than $1 risk, which is, I mean, that's pretty awesome. I can make like $1,000 to risk $100. That's a pretty good reward risk. So very, very friendly for small accounts. Yeah, I didn't officially make one yet, Catherine. I didn't make one yet. So I took the trade last night at like 10 o'clock, and I was like, well, where do I post it? I can, let everyone know. There we go. Now we're getting some double up profit here. I'm just watching this. If we get a bit more direction, we should also see maybe our daily profit play will fill. It's going to be close. Keep an eye on this one. We're now showing a little bit of profit here. Do you have a script you keep referring to? I don't know what that means. You think I'm a robot? Not sure what you mean. What else? Oh, Jose said, yeah, I mean, double up. I don't day trade. It's usually, maybe one or two trades a week on double up, not three, four, five. So daily profit play. And here, I just want to make sure everybody knows the SEC is probably removing the pattern day trading restriction in 2026. That's coming from pretty reliable sources at Tasty Trade. That they're very close to the CBOE, the CME. They have been lobbying with this for years, and I think the SEC is finally listening. With the popularity of betting markets and the popularity of everything for gambling, it's like, how do you not let people trade, an investment vehicle when you're going to let them gamble on everything? So I think the SEC is finally going to remove pattern day trading, which is not that far away. If we're talking, maybe the first part of the year, maybe Q1, that could be good. So that means that if you have a margin account of 5K or 10K, you can trade all you want, which would be a nice win for the retail trader. Tasty told me that last week, sometime first quarter. Yeah, that's what I thought. I think first quarter would be I mean, it'd be great to see it like first part of the year. Okay. Let me see if I can grab a quick winner here. We're at 72. 50% ATR is at 61. Let me see if this gets just a little bit better. All right. Lows of the week around 63. Not trying to get greedy on this trade, but this is getting into my profit trap window. It's early in the day, so I'm not obviously getting like full profit here. But if I could grab like a quick 30, 40, 50 bucks, I might just take the winner. So 17 dot. Let's go. Let me go 60 bucks here. Or 1760 gives me a $50 winner. See if that will tag me for a winner. Okay. I'm going to put this take profit in on double up for 1760 to give me a quick 50 cents. I know that's not something to get super stoked about, but if I grab 50 bucks in, 30 minutes, 20 minutes, I'm pretty happy with that. Let's see if it works. I will. Give me 2 minutes. I just want to keep a close eye on this one. All right. So the low of the week, 63 previous. So we haven't tested like the lows of the week. We're kind of down near it. I'm hoping that we can get down to at least the 50% ATR today. This one I'm watching. So 50% ATR and 6750, like looking to see if we can get down to these levels. If we can, we should grab a quick winner on double ups. We might also get filled on daily profit play, which all the above are good. Okay. So I'm going to keep an eye on that profit. The trade that I took for my hedge yesterday, and I will post this for Crash Insurance Masterclass officially. I took it in ES. It is a April 30th expiration. And let me group this. It's going to be Crash. Okay. So what I did is I went out to April 30th and I bought a 5,800 put and I sold a 5,700 put. That trade filled for $9.15 debit. It's about a $457 risk for a $4,500 profit. So it's 10 to 1. Now, this is nowhere near the lows from April. So I really think that this is cheap enough that if we are below this, that's a 10 to 1 hedge. And I think that's a pretty good trade. If you want to make this really, really, really cheap, I mean, you'd have to be cheering on this market to drop to frickin', 5,000. But I will show you, number one, how low probability that is. And it's really enticing if the market's like straight up going to crash. I'm just throwing it out there. I don't want to scare anybody, but I will say that if we have a bubble, if we truly have a bubble, let me make this a big fat line. Okay. You see that level? I think price could fall back to that level. So if we are going, higher, higher, higher into bubble territory and something terrible happens, i.e. recession, i.e. it's, Great Recession 2.0, Great Financial Crisis 2.0, then I think we're talking about something like this. But that's a low probability. Like that's a black swan trade. So it's, not high probability. But anyway, the trade I took was a 58 by 5,700, 5,800 by 5,700 in futures. We could trade something similar to that in SPX if you did like the 58 or 5750. If you can't trade futures, we can find a kind of a complement to that. Let me see what this is trading for. Sorry. Go back to double up there. All right. Let's grab. I mean, I'm showing them up 55 bucks. Okay. So 1810 minus 1765. Just grabbed a quick 45 at a double up. Now, $45 isn't super exciting. I'm out of the trade. So double up, it just closed out. Double up closed for 17.65 debit. That was a quick win. You can probably hold it a little bit longer. It's trading for like 60 right now, 55 right now. Keep an eye on it, but I'm going to take the quick win. The reason I'm going to take that quick win is because grabbing 45, my max risk was 190. So that's a quick 23% winner on a trade that clearly right now in the morning is already pushing directional. Okay. So the only way that trade gets better is I have to have price in that profit trap later in the day. So here's how this trade gets better. We keep going down, 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 and we stay here for the day. Then it gets really good. And later in the day, this thing offers up hundreds and hundreds and hundreds of dollars of profit. Okay. But if it is going to bounce off of this support and come back above it, this trade is a loser. Okay. So anyway, what you can see here is the 6750, 6730, and 20. It's like these gamma levels are filling up, but we just hit the 50% ATR and it happened pretty fast. So because I only took one side of the trade, I'm just taking the quick win. Okay. So Dion, I'm going to post that. So double up. Trade management. Closing the Iron Fly for a winner. We just got filled on daily profit play for $1, which is good. Let me check and see what the Iron Fly is trading for right now. Close. I mean, look, there's $100 right there. Take the profit. I think that's a good trade. Entry 1810 and debit. I'd say 1725 debit or less. I closed at 17.65, but the profit is better for you to take the quick win. Okay. So take the profit. I mean, right now you've got an 1810 that's already up $100. Take the profit. Okay. If you're up $100 or close to it, your max risk was 190. You're up 52% on that trade. I think that's a good win. Okay. So don't be greedy, take the win. And, however the rest of the day unfolds, it doesn't matter. At this point, we're in for our $1 for daily profit play. Here's where the market started. If we have any type of bounce, daily profit play will be looking good because our 100% ATR is all the way down here, 67.30, 20. We are at a 67.15, which is quite a bit out of the way. I'm not sure how that's possible, Mark, because you should be taking it in for a credit and then closing it for a debit. That's less. Didn't you get filled for 1820? It's now showing 1690. So you're up $120 on the trade. Even my bid ask, my ask is 1730. The ask is even up $80. So the mid price, you should be able to grab about $110, $120 out of this trade. Okay, good to cancel at 17. Okay. Yeah, it's not wrong, John. The sell at 68.40. This is the trade. The trade was, I'll bring it right here. This is what should have been copied in the alert. The call side was a 68.40 by 60. The put side was a 68.40 by 20. So the pin was 68.40. That's spot on. I grabbed 1810, closed it out for 1765. It's showing under $17 right now. Take the winner. So if that's the trade you're in, take the winner. Oh shit, you're right. 67. My bad. Did you take the trade at 67, not 68? Oh fudge.
You want me to get rid of the alert and
that's
send a new
totally
one?
my fault. It should have been a 6800. I mean, you saw me take the trade live, but I typed it into 68 instead of 67. Shit. Sorry about that. Hang on a second. So let me type an alert for everybody. Double up. Trade management. SPX. Fixing the alert. I took the following trade live in session. It was SPX 11.6 expiration. Sell the 67.40. That's my fault. I feel bad. I mean, we were watching these levels. I was calling this area, but yes, I typed in 68, completely meaning to do. Obviously, I took the trade at 67. So sorry that I typed it in incorrectly. So it was a 67.40 call, buy 67.60 call, sell the 67.40 put, and buy the 67.20 put. That was the 1810 credit, and then closed for 1765. Now showing less than $17 debit for a nice quick profit. Okay, we're at 1747. That trade is down to 1675. You're up $130, $140. So my mistake on the typo. As I was talking through the trade, I was mentioning this area like 67. That's a trade I took. I was looking for price to go down. So I apologize if you took the 6800 trade. It should have been way less risk. Call side should have been what? All right. Deep underwater. I don't know about deep. There's no such thing as deep underwater when your risk is like, maybe 100 and some dollars. So look, if I typed it in the way that I did it with 68.40, your trade is going to be super, super credit. Watch. If I did 68.40, 68.40, 68.40, 60, and 20, you're risking like 100 and some dollars. So if you got filled at 1820, 1830, 1840, it's like you're risking a couple, like less than $200. So don't give me this deep underwater stuff when if you take the loss, it's not a full loss. Take the loss. I typed it incorrectly. I apologize for that. But even that trade I just posted is down less than $100. So take the loss. Right? Like if this is the trade I was in, 68.40. So I sell both of these, buy the 60, buy the 20. I mean, I don't know where you got filled at, but if you got filled for 18.50, you're down $100. I would take the loss and yep, my fault. Chris typed it in wrong. I apologize for that, but you're not getting your ass kicked for the day. It's a small loss and it's a typo on my part. And I'm sorry. So, you'd be down maybe 100, $125. But the trade is clearly not what we wanted. Like I didn't want the 68.40. The trade I took was, and I called it on my software side. What was I looking at? All these levels down here. 67 is what I took, right? I just typed it in wrong. So anyway, you know the deal. And I was 20 wide. Yep. So right now it's trading for 1680. That's $130 quickly. And to me, that's not bad. Like let's say you make 120 on the trade. Make 120 out of a 190 risk. You're up 60% on your risk this morning in 37 minutes. That's pretty good. Yep. So okay, I'm happy with the winner. Sorry I typed it in incorrectly. Now let's focus on daily profit play because that trade's also in. Let's see if we can snag the dollar here. So we're in for a buck. It's already up, $8 to $10. Let's see if we can grab. I'm going to see if I can grab like a 70 debit or less. Okay, so now that we're filled, we're starting to bounce here around that 50%. Even if we come down to the 100%, it's going to get a little dicey at the 100, but we're still clear of that. Our level is 67.15. So, I mean, again, I'm not saying it's impossible to reach, but I'm hoping that price won't necessarily stay there because we opened the day. Okay, we opened up at 88. Our trade is literally 70 points lower, and the broker had a plus minus 37 on the day. So the market would literally have to go more than double the market maker move. Not saying that it can't happen, but it's unlikely. So on that note, I think that we can probably take daily profit play for, 60 cents debit, 50 cents debit. I think that's reasonable in the next maybe hour or so. I'm going to throw in I'm going to go 55 cents like yesterday. So if price will stabilize a little bit, let's say it kind of stalls in here. If it goes a little bit lower, I want to see it bounce at some point. I want to see it come back to now what is support to become resistance and see if we can just kind of give us a little bit of green, or if it slides from this level, makes a low, comes back up. I mean, that recenters the trade. That should give us a profit. So now I'll get a visual. My high side is 35 and my low is 15. So 35 and 15. 35 is here and 15 is here. So if price can stay in between these levels for the day, our daily profit play can give us a winner. I just want to see if price, after testing this low, will pull back a little bit. That gets us back into our center. We should be able to grab some profit out of this, keeping it out of the way. Okay. All right. So let me get these updated for the trackers. Keep an eye on daily profit play. Give me 1 second here just updating the trackers. Let's see 1 second. All right, I'll get those updated. All right. $13.10 was today. Or did I go 18? It was 18. 18.10. Yeah, 18.10. All right, and then daily profit play getting filled. Quick bearish slide for the morning. Okay, see if the day will continue to stabilize. If market makers stabilize, we will be good, and we will grab some nice profit on our daily profit plays. Keep an eye on it this morning. I should have grabbed that screenshot yesterday, but it's okay. All right, let's go back to the trade update. Let's see. Did I get the dates wrong? Third, fourth, fifth, sixth. Third, fourth. Oh yeah. So I got to go 11.5 yesterday. We grabbed a winner, filled at $1, exited 55 cents. All right, so updating the spreadsheet. Yesterday's trade would have been closing out at 55. November 4th. There it is. That was yesterday's trade. $68.30. What was our opening price yesterday? Open up around 67.70. All right, almost there. And today, 517. Opening price around 67.90. We did the 35 and 40, 68.35, 68.40, and the 67.15, 67.10. Build for a buck. All right, now track the result. Currently, trade is in and trade is up 20 bucks, 25 bucks. Okay. So keep an eye on this one. If this is showing while we're in session today, if this is showing like 60 cents or so, I'll probably just take it in session. I've got it set already at 55 cents. Let me do a quick update in Telegram. DPP update for today's DPP trade, looking for 70 cents debit or lower. Okay. I set a 55-cent debit for now, but a monitor. All right, so let's see what's going on here. Nice Gil. Nice little winner there. 15 contracts, trading big, no big deal. Took the 10 wide for $1.50. Gotcha. Okay. Yep. Appreciate that, Steve. Thanks. Did I see Graham's chart hack on inverse VIX? Sure, but isn't it the same as it's already the opposite? Like you can inverse it and it's like, yeah, if the VIX goes down, right? If the VIX goes down, generally the S&P goes up. So what are we seeing today? The VIX goes up, the S&P goes down. So you can obviously invert the VIX and they'll go in the same direction. Like I get it. That's just a different way of looking at this, at the relationship. So as volatility is going down for the standard VIX, you'll see that the SPX goes up generally. Okay. And usually it's like a 90+% correlation that happens. We did see a weird disconnect these last like 30 to 60 days with the shutdown that we had elevated VIX and during the government shutdown, the market still drifted all-time highs. Rob says, I'm not sure how it happened because all positions were decoupled, but I netted 510 when I closed out SPX. Okay. It's nice to know what you're doing. I mean, we don't want to trade in. I mean, making money's good. Just it's usually not by accident. So, Rob, what do you got going on there? Let me see if I can inverse. Can I actually get an inverse VIX? Let me see if I can build a new workspace here. Let's create new layout. Let's do SPX and I'll go inverse VIX. I don't know if I can actually flip it, but I'm going to try. So SPX here, and then let's see if we can overlay the VIX. Is there an inverse VIX? So now you're talking all sorts of weird derivatives. Inverse VIX short-term futures, that's not what I want. VIX futures, not what I want. I don't know if there's a ticker for it, if you can just like flip it. So same percent scale, new pane. I mean, this to me is just as effective with the relationship I've seen in the VIX for all these years, which is let's mark the opening bell. So there's your opening bell marker. Okay. And extend that line down. So here's a good example. What happened yesterday? You extend this line down. Okay. The VIX goes down. The S&P goes up. You extend this line down. The VIX goes up. The S&P goes down. Right. And then the VIX obviously is dropping. The market is bouncing. So, I mean, if you want that, I mean, watch it, right? If you made this two line graphs, it's like it's not bad. Take this and make it into a line graph. There you go. There's your S&P, there's your VIX. Make it a candle. You can follow along, you know. So if I can inverse it, cool. But it to me, it's I know the relationship is S&P down, VIX is up. S&P up, VIX is down. Usually that's the case. Like literally, selling premium to me is all about having an elevated VIX. My favorite time, like the reason I was so aggressive in March and April is because the VIX was spiking to like 40, 50, 60. So I sold a bunch of premium. Again, I was selling it cautiously, knowing that like, could this get way worse? But like when the VIX is 40, 50, 60, I think the worst it's ever been was like in the 70s and maybe 80s when it peaked in like great financial crisis time. Let's go back to the VIX and see what's the worst there ever was. Okay. We had in the 80s, back during the COVID crash. And again, this wasn't necessarily tradable, but it did show a spike up into the 80s. Great financial crisis, we had readings up into the 90s. That was pretty bad, obviously. So when I'm selling premium in the 50s and 60s, again, I know that it could come with some ugliness ahead. I realize that, but the probability of the VIX going, higher, and it's not just going higher, but it's staying higher, you know. So I mean, if anybody has been able to short the VIX at a 60 handle, you're generally going to make money within probably 45 to 90 days. Because we're not going to, I mean, we could go here, we can slowly come back down. But that usually marks some pretty significant bottoms in the market. So look, this stuff is, we're talking historical events for the VIX to be that high. I would put Liberation Day this year as an historical event because yes, it was telegraphed. Yes, it was communicated, but man, it was ugly how it played out. And it made me feel like the entire financial markets are systemically linked because when the US was down during that dip, that aggressive dip in April, the entire world felt it. And then everything came back and it's just been a reflexive rally ever since. But market, 2024, we had a Volmagen event with the Bank of Japan. COVID, you got some volatility events back here in 2016 and 2018. Then we're talking just got filled on my profit target at 55 cents. So that was freaking quick. Well, that was quick and easy. 55 cents just got filled. So I'm out. I mean, if you're still in the trade, see if you want to get more profit. It's trading for 50 cents. I got filled for 55, so trade's done. I'll take the winner. I'll help you take the winner. DPP update. It is 10:24 a.m. Eastern time. Profit target hit. So entry $1, closed 55 cents debit. That's a pretty good winner. I'll always, to anytime I'm getting over 30%, I'm stoked about that. There you go. Ernesto says got filled 65 cents, 10 contracts. Awesome. Close at 65 cents, close at 60 cents. Good, good, good. Let's go. So can I compare? Hmm. I mean, it doesn't matter. Invalid symbol. Get out of here. Delete. Okay, so we can pull this up as a reference. If you want to get kind of the short term dips and dives and turns in the market, VIX was elevated this morning right out of the open, and then pivots hard. I mean, you look at it like it looks really easy right now. It's like, oh, that's an easy way to call the bottom. Is it though? I mean, you're just looking at short term price action. So it turns, here when you're saying that the bottom's actually, oh, there's maybe a bottom. I mean, I get it. Like you want to call this candle when the VIX actually makes a sharp move down. Like you could play that game, but you're not really going to get great credits. You're going to have to go out of the money for a lot of these trades. Right here for the morning when the VIX is going up, it's like you've got candles that prove it. So it's not really going to be this like foolproof look. It's like it looks clean, it looks like you can see the relationship. But when you're watching price action, it's like if the candle's red, this is probably going up. If the candle's green, this is probably going down. So read one, read the other. They're going to tell you the same thing, right? But to display it, it's like sure, it looks like it's super super simple to be like, oh, the VIX is down. Let's buy. I mean, maybe for the day it stays there, but I also don't need to add something else to watch for the day when this is plenty to keep me busy and plenty to also keep me very accurate. So did we not come down and hit all the levels I talked about this morning? I said we would come down and test the lows because we had our biggest gamma levels down here. I looked at the 50% ATR. I said 67.50 is probably the gettable target today. Did that happen? Yes. Did we win on daily profit play? Yes. Even though I typed it in incorrectly, did I actually get the trade right on double up? Yes. So this stuff is predictable. Okay. Am I always right? Of course not. But I'm right a lot and I'm right most of the time. And if I wasn't, I wouldn't do this stuff. I wouldn't day trade if I couldn't be right. I wouldn't day trade if I didn't think I had a good roadmap and good probabilities to trade every day. I think that's fair, right? I think I'd be crazy if I'm like, I'm going to show up and trade every single day and struggle. No, thank you. Go trade something else. Go swing trade. Go trade longer term. Day trading is pretty active. But when I feel like we can confidently call our highs and lows, okay, daily profit indicator, I think we can confidently call our highs and lows. VIX isn't any higher. I mean, I guess it was 18.3 when we were talking this morning, so it's up a little bit. But we had a spike up around 19 and change. That was where the market sold off, right? So now the question is, from our calculations this morning, are we going to exceed the bottom at 67.15? Probably not. Probably not. It shouldn't go through this level. But if the VIX is up to 20 or 21 or 22, then yeah, it might dip through the bottom. It can, but we're already out. Daily profit play is already a winner, right? Okay. So pulse of the market, pulse of the crowd. How are we doing today? We all right? Taking some profit? Winners? Daily profit play is trading for 50 cents, 55 cents. Take the profit. I'm happy. Now I don't have to do anything with it for the rest of the day. The trade is in, the trade is done. We're profitable. We come back and tackle the day tomorrow. Okay. Now, if I spend any more time trading, I'm just getting greedy. Because what do I think can happen? Well, I guess we can maybe trap some profit in here for a low risk, high reward, but I have no idea. It's like when the day started right here, I was pretty confident that these levels get hit, and that happened. So why do I have to force any trades now? I don't. So I don't. I sit on my hands. I have some discipline. I now go to my portfolio, go A to Z, and I figure out what's next. Prune, trim risk, maybe sell some more options, find some good trades, see where things are at. Okay. All right. So I'm happy. Good one on the day. Let me do this. I don't think I officially made that post for crash insurance, so I'd like to do that now. I did show the trade, but I want to get into the details of it. So let's go ES for futures. Etsy just got filled for a 250 debit, so it looks like we had a drop on Etsy. We must have done a bull call spread. So this would have been, I'm guessing, pinch point. Let me check. 55 by 60 Etsy for November 21st. That should be a pinch point. Or, yeah, I'm pretty sure it's pinch point. Let me check. Not a pinch point. So let's try Newsbreakers. Etsy, 55 by 60, 250 debit. We took that trade pending on this 22nd. So a few weeks ago. So that trade is filled. Okay. And now that that trade is filled, that's for Newsbreakers, Etsy, go group. Newsbreakers. I'm going to set in a, let's go, I'm going to go 40%. So putting in $1, so I'll go 350. Close position at a 350 credit. Okay, it's already showing a couple bucks profit. It's not awful. Let me see. Let's have a look at old Etsy on the daily. So we get filled. Let's do this. If we actually can grab a quick, well, it's $7. I was gonna say if we had like $20 to $25, maybe I'll try to grab a quick 50 out of this. I'm gonna go $50. Okay. So I'm gonna update this for Newsbreakers. Trade management. Trade 102. Etsy. Entry filled at 250 debit. It's an 11/21 expiration. Looking for a $3 to $3.50 credit for profit target. Okay. So keep an eye on that one. So I'm setting it right now at $3. And we've got time, and we have, I guess the 21st isn't that far. Shit. I was thinking that we had like a month. Executive decision. It's only out a couple weeks. Let's just take the break even. Let me go 255. Oops. I'll just take the break even. See if we get like a 260 fill and grab a couple bucks, make it worth the inconvenience. 260 no, 259. All right, just get me out of here. So I don't want to take a loss. I'll give it a chance if I'm gonna have to close for a loss. I'll try $5. 251. You dirty dog. Crap. All right, I'm gonna go for $3. I'll give it a little chance. Okay. Alerts in, $3. I'm going after a $50 winner. We have a couple weeks on it. Hopefully we stabilize and go back up. We took it off as support. That was the point. Okay. Catherine, did you get out? Tasty showing 260, still just got filled. Did you get out at like 250, 260? Take a small winner? Yeah. Oh, no? Okay, no big deal. All right. I'm just going to leave it at $3 and let it go. All right, let's talk crash insurance. Let's talk crash insurance. Let me see if price will go back up above. Let's see if we get back to like $60. I guess technically, even if we get back to like $58, then we should see some profit. Okay, so I'm going to go to futures. So this is what I am referring to for crash insurance. Now we are a little bit red on the morning. I'm going way out of the money on futures, and I'm putting in. I did a 5,800. So I bought a 5,800, sold a 5,700. I did this out to April. So ES. Okay. So this is the S&P futures contract, not the minis. This is the. I mean, this is not the micros. I mean, this is like the big futures. I went out to April 2026. April 30th, 2026. Okay. I went way out of the money. I bought the 58, sold the 57. Right now, that trade is showing a 950 debit, which is about a 475 risk. I got filled last night at 915. I'm only saving like 20 bucks. So don't sit here and think that I got this great fill. I'm saving about 20 bucks. Okay. So right now the mid price is I've got 960 I'm showing, maybe a 960 to 965, maybe a 970, but the risk is under $500 for about a 10 to 1 reward to risk. So right now this is 45.25 over 475. You're looking at like a 950% profit if this is a winning trade. Now, it's not going to be fun if it's a winning trade because we're going to be down here and price is going to be lower than that. So all it is the peace of mind of, look, I'll spend 500 bucks. If this thing dumps, I can turn $500 into thousands of dollars of profit. So that helps me at least pain point wise on my portfolio here. If it is, and I'll just say that, let's say we turn this into like a $2,000 winner. Well, that's $2,000. So that's a $34,000 hedge, which helps me offset some of this drawdown. Not all of it, some of it. If I let the thing, let's say we're below 5,700 by April, then that's, $4,500. That's a $76,000 hedge. That cost me 1/10 of that. Okay. So it cost me, $7,600 to potentially protect myself for 3/4, or I guess 10x, which I don't think is bad. Now, let me find an alternative. If you can't trade futures, then the alternative would be probably trading SPX. SPX, similar timeline. I want to see SPX. Maybe we go out a little bit farther. SPX, let's look out to April 30th. Okay. Let's go down to a similar price. That low's around 5,750 or so. I mean, 5,800 is not a bad place to start. So if we did 5,800, 58. So this trade cost me $1,000, but it offers me almost $9,000 in profit. So you want to tighten that up a little bit. For 500 bucks, you get $4,500 of profit. You're going 50 wide. It's not bad. Like, your alternative is you pay like a 520 debit. So you're just risking over 500 bucks, but you've got about a 9 to 1. 44.80 over 520. You got an 8.5 to 1 after debit. Like, 8.5 to 1 is not a bad hedge. I like double digits. I love 10 to 1s. 10 to 1s, 20 to 1s are great. It's just VIX is elevated. Prices are up. VIX is at 19. It's a little bit pricier. Okay. If you want to risk less, $265 risk for a 2240 hedge. So again, just like 8 or 9 to 1. So I personally, on my crash insurance, I usually am comfortable with like the $250 to $500 hedges, but I'm looking for like 10 to 1. XSP, it's not as liquid. You can take the trade. It's going to be like hedging on the SPY. I'll show you. XSP out to April 30th. Let's look at the feed here for XSP. So we're probably talking like a 580 to 560 zone for XSP. So 580. Okay. So if I buy the 580 put, this will cost me $1,000. Now, obviously the profit's like, holy crap, that's amazing. Right. But if you want to risk $1,000 with a 11% chance of profit, then there's your trade. That's not really what I want to trade though. The hell trade just get filled. I just had a new strategy get filled. I'll take a look at that. All right. So XSP for 580, you pay 997, and you can have if the market goes to zero, you make a lot of money. That's probably not the probability. So now let's say we go from 580 down to maybe this like 480. Let's go 580. Sell this. That's not bad. 580, 530. You pay 407. You get 45. And that's better. That's over 10 to 1. 45.93 over 408. So you have 11 to 1 on that hedge, which is, again, totally reasonable. Okay. You want a little bit more, 465. If you go from the 580 down to the 510, you pay 512. But 64.89 divided by 511, you got about a 12.7 times return on risk. And what does price have to do? It has to get all the way back down to April lows. Like 510 is way down here, right? 510 is like we're coming down to April lows for that trade to pay. But the nice part is even if this risk of, I don't mind this trade here, this risk of like $467, even if this offers, let's say $2,000 worth of profit, $2,500 worth of profit, we can take that. Okay. So if I can turn $465 into $2,000 or $3,000 of profit, I know the max here is $5,500, but I'd have to wait all the way to expiration to get that. So if I can turn $400 into over $2,000 or $3,000 in profit, that to me is a very worthwhile hedge. Okay. So I'm going to do this officially for crash insurance. I'm not going to post the futures one because not everyone's going to trade it, but crash insurance trade. I'm doing XSP 430 expiration, buy the 580 put and sell the 520 put. It's about a we'll say 470 debit. So 470 max risk, and you have a 55.30 max credit. So looking to see if we can turn, $470 per contract risk into, let's say, $2,000 or better for a hedge. I don't want this trade to necessarily pay us, but I have been de-risking and de-leveraging, and just in case, if the market rolls over hard in 2026, this is a cost-effective way for a greater than 10 to 1 reward to risk. There. So we'll make that one official. Okay, so a 580 put, 520 put, that's a bear put debit spread. 465 to 470 debit. You've got over 10 to 1. Again, not bad. So 55.36 over the 465, got about 12 to 1. Not bad. Okay. And yes, S&P is falling. This is exactly what I said yesterday in that Telegram video, or that Telegram post I did on TradingView. I recorded the video. I said, look, if we are going to stay below this trend line, we are going to be continuing this correction. Okay. You look left on this chart, this October 10th low is really important. So whatever the market needs to get out of its system right now, okay, fine. Now is the time to do it. Okay. What I think is going to be annoying is if this market continues to hurt itself to the downside, all hinging on NVIDIA earnings in the next week or two. And that's the only thing that can save us. So it's like this market does stuff like that, where it will drive you to like the absolute like 11th hour of a decision. It'll drive you to think like there's no, like you go into these news events sometimes thinking like, it's a coin flip, but at the same time, it's like the market's probably going to use this as an excuse to do something. And, the market might love NVIDIA and it might hate it. And that's what's so dumb. It's like we could come into it's again, totally just talking out loud here, but let's say the market as we're coming down. So high to low, high to low, high to low. We're obviously going that trend right now. This is a fairly organized correction right now. So I'm not getting like overly worried. What's going to be more concerning is if we just start to blow through structure. So if we have some corrections here, it's completely tradable and it's kind of organized, right? This would be a correction that's very organized. You can kind of plot this out. When it gets a little nasty is when it gets a break of structure and we're just sweeping all these lows. That's what I don't want to see. That shows that the bears have the upper hand. It's probably showing a massive amount of deleveraging, and we don't want that. We don't want that. So I'd say if the bull market's going to stay intact, like today, we probably want to stabilize at some levels like now. We're almost at 100% ATR. Do I want to call the bottom today? No, I don't. Okay. But I am interested. If I look at my VIX box, I am interested. Look, the VIX is higher. I acknowledge that, but I might be able to sneak in. Look, we're at a 19 to 8 VIX. I mean, we're talking a big increase here. So a 19.84 VIX. We're looking at now like a 1.24% move. Let's go back to the daily profit indicator. Okay. If we looked at a 1.24, again, the VIX can keep going higher, so it's very challenging to call the bottom. So don't call the bottom today at 67.20. If I'm going to call the bottom, it's going to be move this thing the heck out of the way. Okay. So right now, I'd say 1.24 from the open, which is right around here, 1.24. We're looking at maybe around a 68.10 bottom. 68.10, 60. Jesus, I said it again. 67. Everybody hear me? 67, 67.10, 6,700 bottom. Does that make sense? Again, I don't want to call the bottom. One thing I'm going to look at right now with the VIX falling, and who knows what Friday is going to bring. So, let's proceed with caution here. But SPX, let me look at tomorrow morning or today for that matter. I don't think we necessarily go too much lower than 67. So let's price something out here. Could we get, and it might be a terrible fill, like a 66.50. I mean, if like this trade, it's like it should not come down to a 66.50 today. If we did that, we would have a fall. And I'm not saying that we can't, just talking out loud here. If we came down to 66.50, we would exceed the 200% ATR. Okay, we'd have a 2% move on the day. It can happen. It's just not that probable. Okay, so I'm thinking that 200% ATR is around 66.57. Let me price one thing out. If I went 55, 50, and 40, broken wing butterfly, I would take this trade. I'm willing to take this trade for $1. I don't think it's going to get filled. I really don't. But I don't know. If you want more credit up front, I almost think a credit spread is better than a broken wing butterfly. So if I did the 50 by 40, or even this, if I get filled for like $1 on this trade, you're risking 4. It's like, that's the thing is, after we're taking wins today, it's like, I don't need to take unnecessary risk. If the market's going to drop 2+% today, it's like, I don't want to be taking unnecessary risk. So that's why I kind of like the butterfly, because there's that profit trap at the end of it. I could still be wrong, but I mean, I'd be risking $400, which is, manageable compared to like, oh crap, I got blown out at a 10 wide credit spread. Okay. All right. So let me do this. Crash insurance. We just posted it. I've got 2 trades in. So crash insurance, I'm going to post this in the Zoom chat for everybody. I did a ES April 30th expiration. Buy the 5,800 put, sell the 5,700 put. I got filled for a 915 debit. So that's about a $450 max risk for about a $4,500 max profit. Today, we discussed XSP. So XSP 430 expiration. You can buy the 580 put, sell the 520 put. It's about a $500. What was the debit? Like 465? 4.65 debit. And that gives you a $60 max credit, which do the math, and that's like 55.35 max profit. Okay. Again, it's a low probability trade. It's out there for insurance in case we need it. Bad stuff is bad stuff is happening if we're taking that trade, and if we're celebrating the crash insurance trade that we took on November 6th. Don't be too excited, because it means that like the shit's hitting the fan and things are bad. Okay. But it helps offset some of the pain that comes with a nasty pullback. The market would be down from the recent all-time highs. The market would have to be down from all-time highs. We'd have to be down to what? We'd have to be down 20+%. Okay. Now we don't have to stay there. Like, we can obviously have the VIX go crazy and this could still offer some value. We could still take partial profits on that trade. But if we're going to get this thing to pay us the full profit of 10 to 1 or 11 to 1, price is going to be down 20+% from all-time highs. Now, I'm not saying that to scare anybody. Look, this is still support. That 50-day moving average is probably a key level, because we found support here. We found support in between. We found support in between. Like, this is a key spot. So I think it's really critical to kind of maintain that. If the bulls are going to keep this party going, they better do a better job of like defending some of these pullback zones. So, and I'll just throw some structure out there just as a little bit of a heads up. If we test this level and this level, I could see, get out of here, bro. I could see the market, finding this 50 period. Is that enough to offer some support? I hope that it is. If we pull back to test that October 10th low, is that a broadening pattern that offers some support? I hope that it is. If we're going to finish the year strong, no, we shouldn't really do a ton of damage. At this point in the year, it's like, I don't think we're going to V bottom and finish the year. It's like, we should just kind of contain this sell-off and hopefully find some support. Okay. All right. So we good? Why not buy the sector ETFs that hold up? Because nothing holds up, Mike. There's nowhere to hide, dude. When the markets are down, money rotates, but nothing holds up. You're not going to make a fortune holding a different sector. You're going to not lose money when you hold a different sector, like consumer defensives, right? Consumer staples, maybe energy, because this is less correlated, but there's nowhere to hide. If you traded through 2022, there's literally nowhere to hide. I made a fortune in 2022. Like, I came out swinging like 20% gains for the year in like the first 5 months, because it was all energy and inflation plays. And for the rest of the year, I was just hanging on to dear life, just not losing money. And I ended up finishing the year like 19% positive. But I literally was fighting the market the entire time, because bonds were down, stocks were down, every sector was down, everything was red. So there's nowhere to hide. You don't just hide out and make, I want to make money. If I'm going to get my ass kicked in the market, I want to make money, at least offsetting some of the pain. So a hedge does that. Okay, Buck says those with medium-sized accounts could do a few contracts. Yeah, MES, like I said, I was looking out last night to, like December of 2026, but that was way more expensive. And so I'm like, all right, well, if we're gonna get a weakness window now, let's say this like spills over into something worse to the end of the year and maybe has like a rough February to April kind of weakness patch in 2026. I thought that's plenty of time. We're out, basically 6 months. I don't mind spending, $300 to $500 on a hedge with 10 to 1. So like I said, I don't want these trades to be profitable, but it helps when we have them. So if I sacrifice, a fraction of 1% to hopefully offset some of the pain, that's what it's for. Literally the crash insurance trades we've taken, we got paid a lot in here. And I think I might have had a small pay here. And we took the VIX trade during that October 10th sell-off. So I have probably had 1, 2, 3 winners on crash insurance. And I've had hedges that I put in, while the market was coming back to this level, I put hedges back down to these lows. Those are worthless. I probably have 2 or 3 of them. I have E-mini futures, micro futures, and they're worthless. So, I mean, net, I'm positive on the hedges overall. But the market melting up, it's like these are pointless. They're not pointless because if you need them, you're happy to have them. But they don't always pay, and so don't expect crash insurance to pay. What crash insurance does is it doesn't make you have nightmares about how bad your portfolios draw down, because you can stomach the idea that if the market's going to sell off and sell off aggressively, there's a lot of money that we can make very quickly, and we're not risking a lot to make it. So for every one hedge, if I can make 10 times that, that's a great trade, right? And even if I make 5 times that, that's still a great trade. So anyway, all right. I know we didn't talk through anything today, Deanna. I hope that's okay. Now, what's fine? What's fine? We did crash. We did a double ups this week. We did this morning. We did daily profit late as always. We did our masterclass for pinch point yesterday. We had a great session yesterday. Went through like literally all 37 trades, and we got a lot of pending orders in. So I posted that inside your pinch point scanner alerts. I would say that pinch point is a lot of fun. We had a winner this week. I'm trying to think what the winner was. Something hit profit this week. What was it? I don't remember. Something hit our 50% take profit. We closed out a bunch of waterfall trades yesterday. What else? Pinch point. Looking to see what the trade was. I guess I could look at the Telegram. Doi. Okay, so here's what I did yesterday in pinch point. I posted all these trades for members yesterday. New trades added. The winner yesterday was NCLH, Norwegian Cruise Lines. We got in for $1.03, closed out for $1.53, automatic take profit from the broker. Love those trades. That's mostly what happens on pinch point. Take the trade, set the take profit, broker closes you for profit. Feels pretty good. Okay. All right. Where we are at right now, technically, watch for the 50 period. Okay. It's not that far away. We're probably gunning for it. Does it get there all today? I don't know, maybe. But like I said, watching these lows here, I'm hoping that the market doesn't do too much technical damage from what I'm seeing at the top. There's good support, at the 50, at the 100. But if we break below that October 10th and get below this 100 period, we could pull back to the 200 ATR, 200 EMA, and still be supportive. It's just not going to look as good because we're talking a double-digit correction, right? The market would be down, almost 10%. That's not going to feel great going into the end of the year, to be honest. With what this market has shrugged off all of this year, and all of a sudden now we limp into the end of the year and a 40+% rally is basically neutralized. Because what would this thing be year to date? I mean, everyone was stoked about oh, this market's it's not up that much. We're talking maybe it's up into the teens right now. Let's go year to date on let's go yearly candle. So a 12-month candle. Okay. So for the year, the market's up, I think double digits. We're hanging in there about 13, almost 14%. If we fall back 10%, okay, we go from this level, we fall back 10%. We are coming back to it's not good. That would be a 6. What's my level there? I'm trying to find that low. If we fell right here 10%, 623. 623. Congratulations, everybody. You'd be up about 5 to 6% for the S&P this year. That feels a lot different than being up, 30, 40% for the year. Because the bottom, it's 40% from the bottom. The NASDAQ was 50% from the bottom. You participate in those bottoms, there's a lot of money to be made. But it would be really frustrating to go give it all back. The market's finishing 5% of the year, and then every Wall Street analyst can say, we told you this is why the market only averages 8% a year because, but it's just a ridiculous volatility year. So like I said, I think to maintain kind of the integrity of this market and see that the bulls are still in control and firmly in control, we want to see prices hold support. And right now, that support technically is the 50 period moving average and the October 10th candle. We don't want to go too much lower than those. Okay. So let's just look. The good thing is all this stuff is just getting us ready for whatever happens and just get some big picture talk. But we come in and we trade every single day. We trade every single week, and we're going to figure out how to survive. So that's why I think it's also important that if you do have a lot of risk in your portfolio, you can de-risk. You can add a hedge or so. You can de-risk the exposure. I think that's an important thing to be considering right now. Okay. And that way, I mean, like right now, it's like I'm sitting at over 50% cash, 2.7 in option buying power. So 2.7 out of 4.8. I'm 56% cash right now. Like that's by design. I wish I was, 60, 65% cash for now, but I will start to, strategically deploy more capital when I think is appropriate. But what I will do is every day, every week, we'll be grinding out some, near-term trades and trying to grab some income for the week. VIX at 1997. Do you think SPX can break 60? I mean, it can certainly come down to test it. I mean, here's my daily profit indicator. It's like we can test if we're up to a 19.9 VIX, then yeah. I mean, look at this is the updated measure. 19.9 VIX divided by 16, got a 1.24% move. Take that from the open today. 1.24% is right around 67.10. So I'd say right now, like 67.10 potential bottom, and that's roughly a 20 VIX. Right? So be careful if VIX continues to rally greater than 20. Don't call the bottom if the VIX keeps going up. Okay, so I hope things stabilize. We are around the 100% ATR right here. I'm also not showing any major gamma to the downside below about 6,700. Do I want to call the bottom at 6,700? Not really. And if I'm going to call the bottom, I'm not going to get the type of reward to risk that I want because I'm just going to be guessing right now. So let's look and see what 6,700 looks like. If I did a 67, I mean, I get 95 cents, but I'm risking 405. That's not a great trade. If I wanted to go down to 66.50, way down here, I mean, if I'm willing to take more risk, it's like, and this is a very gutsy play, but it's like, if I put this trade in and try to get for $1, I'm risking 9 to make 1. Probability profit still is really high. Look at this POP, 99.5%. But it's that 0.5% that annoys you when you lose, and you lose, $900. You're like, why the hell did I call the bottom? So it's not worth it. If you're going to set a trade like that, do a broken wing butterfly. I mean, I'm curious myself, like, how far would we have to go today? If we broke below 6,700, how far would that move be? From the open to 6,700, we'd be down about 1.37. We can absolutely see 1.37. It's the 2% move that I think is very difficult for the market nowadays. It's very rare to get a 2% move. So that's a 66, 60 or 60, 66.55. So here's what I will do. And this is probably not going to fill. I'm pretty confident it's not going to fill. But if it did fill, maybe we get super lucky on a trade like this, where the market's going to drop 2% today. And this trade would be offering this is a broken wing butterfly. Right now it's trading for 15 cents. I'm not excited about 15 cents. Okay. If this is trading for 50 cents, I'll take this trade. I can get a high probability 50 cents. I also have a $5 profit trap in case we're coming down to test this level. If price obviously stabilizes here, then it's not going to get filled. But I'm going to put this trade in for $1. If it shows 50, I'll probably modify it and take the 50 cents. But if it fills for $1, freaking sweet. Because I'm risking 4 to make 1, but also have a profit trap of $500. So I could potentially make 6-ish. So I'm going to throw it out there. 55 by 50 by 40. It's a broken wing butterfly for $1. It's trading for 15 cents right now. I don't want 15 cents. I want 50 cents minimum, or I'm going to set it for $1. Okay. All right. So that's going to be a pending order. I'll throw that in. This bit of a bonus trade if you want it. So bonus trade, SPX. Today is the 6th. I'll make sure I type this in correctly. I really feel bad about that. That makes me mad, especially when it was a winning trade. 66.55. I'm buying the 66.55 put with one contract, selling the 66.50 put with two contracts, and buying the 66.40 put with one contract for $1 credit pending. Yep. Sean says, Glade got a daily profit play. Yeah, but remember, what was our line in the sand, Sean? Our line in the sand was 15. We're still 20 plus points ahead of it. So even though there was risk on the trade, it's like, let's see what my 55 cents is trading for. I mean, I'd literally be down $20 right now. That's not, it's like we have plenty of breathing room. And the way I've been constructing these trades, like, yeah, I'm going after 10 deltas and I'm going out of the way, but I'm getting filled at a decent fill. $1 credit on a 10 delta, that's a pretty good probability and it's a good fill. So it's been working pretty nicely for us, and I'm fine with that. So anyway, point is that allows kind of the ebbs and flows of the day, and the market obviously is a bit more directional, and that's fine. But you're down 20 to 30 cents in that trade if you're still holding it. And as time goes on, I mean, take a look at your expected move. Is the expected move for today? 15 is my line in the sand, right? So it is trading for about like a 30 delta, which means it could still be threatened. But if you remember this morning, this was a 10 delta. And market makers know this stuff. And the plus minus in the day originally started at like 37. It's retreated to 30 something. So, I mean, according to this, what's happening in the option chain right now is we don't go another like 30 points lower and stay there. So if we went all the way down to like 05, I'm as curious as you are. We go down to like 67.10, 67.05. Do we bounce off those lows? The one thing that you rarely see in this market is that the market will get to the lows and stay at the lows. What the market can do, and we've seen this before, is it gets to the highs and it stays at the highs because it's just push, 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 no sellers, no sellers, no sellers, positive gamma. But what have I said about this negative gamma stuff? Negative gamma means nobody is selling puts. Okay. Negative gamma is you buy puts. It's more expensive, but people are hedging. Negative gamma is when things get a little bit nastier to the downside. We are in negative gamma. We have been in negative gamma. I think other than one day this week, we've had 3 out of the 4 days of negative gamma this week. So it's not a surprise the market's making lower highs and lower lows. But this stuff shifts every single day, right? This stuff shifts every day. So tomorrow, I mean, I don't know what the price is going to look like tomorrow, but if let's say we close here, tomorrow we open up and here's our gamma. Well, if price gets above it, we're in positive gamma. The market, it's just reassured like, well, buy the dip because you're selling puts and selling calls on positive gamma. All it takes is for us to get into positive gamma and stay there, and the market's like stable again. But again, we'll address it tomorrow. So yeah, I mean, I'm happy we took profit today. Winner for double up, winner for daily profit play. Not trying to be a hero. I don't have to do anything crazy. Let's see what happens. But if the market stabilizes, and I'll talk about this at the end of the day today, if the market stabilizes, here is the open. Where's our opening price? Right in here. Opening price. It was a plus minus 37. So when the day is done, are we less than, right? Did the market move like 40, 50 points lower and stay there? Or did the market move down 40, 50, 60 points, which it is down about 40 points right now? Is it going to push down and then move back up and be within the market maker move of the day? That's day trading. That's what market makers do every single day. Even in positive gamma, even in negative gamma, they do the same crap. They gotta manage risk and create liquidity. So that's where we get a lot of stability in the markets. Here are some trend lines to offer some support. So I mean, there are technical levels for near-term support. If we break these trend lines, okay, I'm cautious. If we break this October 10th low, I'm cautious. If we want to resume control by the bulls need to do this. Bulls need to break that high. If we take out this trend line or we put in a decent bottom and have a nice aggressive rip, that could be the near-term bottom that gets us back above and we start trending higher. But day to day, we don't have to really, it's crazy because like day to day, you don't have to think big picture. Day to day is just win the day, right? Win the day. So what is day to day? Day to day is this. Come join me every single day for daily profit play. Let's win the day, right? Waterfall income. We've been positioning. We took a lot of profit yesterday. Double ups if we can find some good levels and good flows. This is all short-term stuff. Pinch point. It's swing trading. We trade the markets up or down. Okay. So anyway, a lot of good stuff. All right. I'll let you go for today. I'll be back later on today for a final hour session. But if you have any questions, let me know. It's always good to hear from everybody. You can email me, chrispulverpub@gmail.com. If you have any questions on services, what we're doing, what our trade style is, obviously ask me. So email me, or you can ask our team, support@prosperitypub.com. And, we're running the stuff every single day, every week, every week, every week. These are swing trades, but I usually look at the scanner every week. I'm looking at the scanner every week. Crash insurance, when I feel it's appropriate. We've taken, I think, 5 or 6 trades in crash insurance. We've had 3 of them pay us really nicely. We have a VIX trade running for crash insurance, and we took the trade today. I did futures, but you can do XSP for something comparable. Okay. Project Options Edge. We've managed a lot of profit. I use this actually. This is a big de-risking and deleveraging as well. This is just great income trading. And I did a workshop on this last week. If anybody is new to me or new to options, I do have a $27 course that I'm happy to give you the link for it. This is bullish spreads, bearish spreads, buying calls, buying puts, and just getting a better feel for option trading. If you are liking this idea of defined risk trading, the full course is included with any upgrade to lifetime. So if you upgrade pinch point to lifetime, okay, you upgrade double ups to lifetime, or newsbreakers lifetime, waterfall income lifetime, double daily profit lifetime. This is a $500 course that I sell online, and I will give you the full course included. I want this to serve as foundational education and prerequisite education. In the full course, I walk through several broker platforms to show you that the options chains are pretty much the same. Whether it's Tasty, Thinkorswim, Schwab, E-Trade, Fidelity, Robinhood, Webull, pretty much the same thing. Okay. It's also 13 of my favorite option strategies. So the butterfly spreads, diagonal spreads, iron condors, strangles, long puts, bullish spreads, bearish spreads, a lot of them. So you have that as kind of a nice foundation and bonus stuff. Okay. Chris Pulver Pub. Yeah, it's right here. Chris Pulver Pub at gmail.com. Cool. All right. And we'll see where the day goes. So we are down towards the 100% ATR for the day. Doesn't mean anything. If the market makers do their job, they would be defending this level at some point, because we're already down about 60 points on the day. Market's down 60. Okay. Market's down 60. Plus or minus was about 37, 38. So if market makers do their job today, then prices should be stabilizing and working their way back up to the close. Okay. Doesn't mean it's going to happen. If they let prices fall here, I would imagine that Friday is going to be a stable day to roll things and kind of get, if they let direction go for the day, they usually tend to roll it back and stabilize it within the next day or so. So if price, and again, the good thing is we're already out with profit. So whatever happens today, if it stabilizes, market makers do their job again, congratulations to them. That's what they're supposed to do. And then tomorrow's a brand new day. If this gets directional to the downside, Friday, I would just be looking for a stable Friday, because they'll usually throw the expected move will be much larger, and then they contain the price action, and they sell a lot of calls, they sell a lot of puts, and they get their money back from rolling the risk. All right, I'll let you go. Thanks for being with me, and we'll talk soon. Bye.